Good afternoon, everyone. BC Richfield here, coming to you live from London. It is just gone 1 p.m. here, making it midday UTC. Big shout out to everybody joining the live stream today and for everybody that's watching this on recording. So, what have we got today? So, today I want to do two things really and focus. One, I want to look at Bitcoin, current price action, where we are, what we're looking for, levels we're looking for, and how we derive those levels. And then we'll take a quick look at like DXY and ES, but I want to open up the floor for any chart requests as well towards the end so we can look at some bits and pieces. So before further ado, we're going to absolutely crack on with this. Let me make this a bit bigger. Now, please do let me know, guys, if there's any issue with the audio or with the visuals. Hey, Jay Showman, hello from sunny SA, one of my favourite places in the world. Especially the East Coast for diving. Just some of the sickest shark diving I've ever done in my life. So, guys, welcome to the stream. Thanks very much for stopping by. We'll give it a few seconds, allow the rest of the people coming in at the moment to pop through. But do let me know if there's any issues, guys, with the audio or the visuals. And then we're going to move on. No? All good? Awesome. Okay, guys. So what we're looking at here, I've just got a naked chart of Bitcoin and I'm starting on the weekly. All right. So we're just going to do a really simple top down. We're going to do the same thing if we got any alt requests later as well. So just, get a lot of questions about these after the webinars and bits and pieces, how we do all of that. Holy shit. Awesome name. Audio great. Perfect. All right, guys. Well, let's crack on then. So see if we can keep this one under an hour or thereabouts. So zooming in on the weekly, you don't need me to tell you that this is bearish, right? Lower lows, lower highs. We're just looking at simple market structure. Now, people have been asking me a lot how I derive my levels. So key areas that I'm looking for. So first of all, I'm looking for the extremes. Yeah. So untapped highs and lows where we think there's going to be liquidity sat. But I'm also looking for what's capped the market, right? To coin a phrase from a lot of top traders, right? So for me, that means what's kind of stopping the market's progress up or what's stopping it from breaking down. So all I'm doing here is I'm getting my trend line tool. I'm flicking my magnet function on, which you can do by either clicking that, in which case it stays on. If not, you can press your command button if you're like me on a Mac, and it just allows you to snap onto it while you've got that pressed. So for the upside, this is the level of most interest to me at the moment. Obviously, we're not really in any danger or any immediate danger of interacting with that level. And then I'm looking for what's capped the downside, right? So why have I picked these levels? Now, for me, we've set this low and we failed to progress beyond it. When we've re-interacted with this low, we can see we've dipped into it here, strong buying pressure, dipped into it here, strong buying pressure, so on and so forth. We haven't managed on a weekly scale to close below this low. So for me, that gives it significance, all right? Same for this. We're up here. Now, you could say, right, that we could use this higher, and that would be absolutely valid as well. But what I like about this is if I'm telling a story with price, which is what I'm always saying to myself when I'm trying to work out where my bias lies, I'm saying to myself, okay, price found a key resistance here. It's then tried to run beyond it, sold off quite aggressively, right? We've then had indecision here on this inside day or inside week. Then price has pushed up. Now, let's remember what we're talking about in terms of our patterns, right? What we've got here is an inside bar. I'm just going to make this red, keep it consistent. So this is our inside bar pattern. This big candle here is the mother bar. This is the inside bar, right? So we're not going to focus on this too much, but just to get you in the mindset of how I like to trade these levels and how I'm, adding confidence to the chart. So this inside bar is caught when we get this deviation or this fake breakout here. Price then comes back within the range, trades a lot lower, finds liquidity below the lows of the previous week's candle. And then we move up. We've got this candle here, which is indecisive, right? Henceforth, it's an inside bar. This is the mother bar. The following candle closes within the high and low range of that, and therefore creates our inside bar. Now, what we're looking for with this, with an inside bar play, is we want to see the highest swept, price fail to progress above. Then when we come back within this, we treat it as a range, meaning that we're then targeting the lower side of the range, which is down here, right? And we can see price moved up, swept above here, came back within, and then we had this powerful sell-off down below here. Now, We treat the same with the range low. So if we extend this across here, now for anybody that has experience range trading, or for those that don't, what I like to do is I always like to split my range. So I've got my 50% line. All right. Now, let's consider why that 50% line is important, because it becomes our first target. So we can see up here, right? Price runs the highs. First target is the 50 line. When we get a convincing close below that, we then run these lows. We come back within the range, tag that 50% line again, and then we sell off. All right. So always remember to be looking for your candlestick patterns as well, right? Because they have significance. They tell us what's happened in the market, and that can help us predict what we think is going to happen in advance. Now, the reason that this level is significant for me is because we get this deviation. And obviously this is with the power of hindsight, right? We come out, we clear out this high, price comes back, we then clear out this high, with this candle, come back in this range and sell off aggressively. So for me, this was a deviation or a fake out here, and then the selling pressure very much to the downside, okay? Crypto bald, I'm in a so long, let's go. Awesome, all right, bud, absolutely best of luck with that. So now what we're doing here, we're looking for any other significant levels here on the weekly. So again, if I'm telling myself all the time what is capping the market, for me, I can see this high here. We draw this along. We can see resistance, deviation, comes back within, sells off aggressively. Where to? The far side of the range. Now, if we track this back, we can see that we've got a lovely bit of confluence with this level. So all of a sudden, there's higher time frame significance to this. That has capped the market there, stopped progress going up. We've met resistance, come above it, haven't closed. Then when we do close above it, see this nice impulsive move that punches through. We then set this high. Price then revisits this to draw on liquidity, right? Just below this low. And then it pumps out higher. And then we get this bullish move. Now, we get capped here. And when price comes back down and closes under this level, we can see here that we get this pretty much to the dollar retest here before we sell off, retest again, right? We've gone from one side of the range to the other, and now we've done the same again here with this deviation from here down to the lows, okay? Again, what do we want to do? Because now we've got two clearly defined ranges on the high time frame, here to here, and then here to here. So again, if we want to split this, and all I'm using for this is a really simple Fibonacci, get your Fib retracement out, just tick all of them off, just add your 0, your 1, and your 0.5. You can use that as your range fib. You can add the 0.25 and 0.75 as well. But for me, if I'm just looking for this, my key thing here that I want to see is the midline. And once again, especially focusing on this area, look what happens when we get this big move down through. We come back, fail to close above the midline, and price then looks for liquidity lower down. So for me, I'm looking for what? Liquidity, right? So if there's liquidity down here, when we run these lows, then our first idea or the first point that we go to is, okay, well, can we find proof on a lower time frame that we've had a bullish reaction down here? And then when we get back with inside this range, what do? We target first the 50 line, and then we target the far side of the range, the same way that we would have done when we broke down here. We would break down back in the range, target the 50 line, lose the 50 line, target the range lows, okay? Then when we step into this range, we've got a whole new range to trade, okay? What else am I looking for on these levels? Well, I'm looking for fair value gaps, inefficiencies, for which this was a key one, in my opinion. We've got this on the weekly. That's the gap. It's a 3-candle pattern, 1, 2, 3. It's the gap, if one exists, between candle 1 and 3. So you see how this wick finishes here, and this wick finishes here. Oh, okay, guys, just had a note from Joe Schumann. Apparently the audio has gone. Can anybody else confirm that? 1 second. Just popped a note in the comments, guys. Has audio gone for all? Can you just let me know? Just pop on a comment or that if you're struggling to hear the audio or if it has gone completely. Let me just... Check. I'm getting the register as it comes through. No, all fine. My end. Thanks, guys. Thanks, guys. Still hear you, mate. Audio on. Legends, legends, legends. Thank you very much for so many. So yeah, apologies, Showman or Schumann. I'm not sure. Maybe issue on your end. Hopefully you can hear me again now. If you can, great. Thanks very much, everyone. Tell that guy to turn his volume up. That's it. Crank the volume up, guys. Come on. We're dropping the alpha today. All right. No, thanks for those responses, guys. So yeah, do let me know though, Joe. Absolutely right. Let me know if you've got any issues on that because other people might be suffering it as well. So fair value gap, inefficiency. What does the market want to do? It wants to rebalance it. Yeah. Okay. Oh, load shedding, mate. Yeah, I've been in SA, brother, and stuff when that's been going on. Absolutely understand your pain. So we've got this inefficiency. Now, what are we telling ourselves? Remember, we're telling the story. Yeah. Price breaks down here. This is going to act as a lure. What have we got? Key level, we've got liquidity above this level. Key level, liquidity below this level. What else have we got that's playing into our matrix at the moment is this fair value gap, right? So when we drop down here, price kind of seemed to stop in no man's land, really. It gets drawn up towards this, and as did this. It came up here. We absolutely battered anyone that was trying to go long above this level. It's taken all of that liquidity, and then it's used it to fuel the shorts, right? Smart money concepts. People like ICT talk about this stuff a lot, all right? You're looking at where liquidity lies, right? And you're looking at how institutions, banks, and that are looking to move money around, how market makers are looking to manipulate and create this liquidity, right? Because you want an efficient market. So we've got our weekly levels. We're now going to drop down onto our daily, all right? And all we're doing is we're getting more and more information every time this runs through. So we can see up here, price came in, interacted with our key level. Now, what could we have done with this information that would have allowed us trade entries, right? So you can play this purely on price action, right? And then you're going up, look at taking out the key highs, liquidity above these highs, then you're looking for price to break down, right? You would look for market structure on the lower time frames, which I'll run through with you, all right? Very hard. You need to wait for a real lag on this one, all right? But then again, we've come up, swept this liquidity here before we've had the larger reversal. Now, what tools can you plug in to help you with this? You can plug in divergences, right? So I use BPro. It takes a number of different indicators and then works out the divergence based on a percentage across the strength or weakness shown in all of those indicators, right? So we can see we wouldn't have been able to trade this. So don't kid yourself, guys, when you're drawing these levels. That's where the level is derived from, right? So our tradable opportunities come here, 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 and here. All right. Now, it doesn't mean we have to hold these things on the basis of the daily chart, but these are really, really powerful indications that there's an imbalance in the market between what we're seeing, yeah, and what's actually going on. So, the same way that we can look at all these upside wicks here, telling us that every time price tries to reach in here, it's getting battered down by sell pressure. Yeah, price is being driven up into here, like taking out stops that are above here, creating liquidity, filling sell orders, because when you open a short, your stop loss is a buy order. And the reason you're creating these buy orders here is because people that want to sell need to find the buyers. So the market is working its way towards the buyers, yeah, those buy stops, and then it sells off, right? So we've got our buy side liquidity here, sell side below here. So we can see here it's nice and clean. And for me, I really like, I'm not a huge user of indicators, but I do like using divergence, right? It has to be the right divergence. Be very careful when you're picking divergence-based indicators. Lots of them lag 2, 3, 4 or more candles sometimes. So when you're back testing, it looks great. Yeah. They were here. But actually that one printed when you're already down here. All right. Good thing with BPro, you get it confirmed here. This next candle is then tradable, all right, once that's confirmed. But I don't want to digress on that too much. Again, I get loads of messages about this after the streams, and I'm happy to share information with you. You can find the bits and pieces in the description on the YouTube channel as well. But if you can't, and there's something you're interested in, just pop me a message on Twitter, all right, guys, or come and grab me over at the Nest. So what are we looking for here, right? We're simply looking for where price is going to go next, yeah? So remember, we've split this here into our range, right? So let's just put that there. And look how well this 50 line's been respected, yeah? We had this huge pump here. Now, remember. Why, not why, but look for structure, right? fast moves, inefficient moves, fair value gaps, right? These tend to get refilled because the market needs to rebalance. Yeah. So when we're seeing patterns like this, you're seeing these staircase-like patterns. There's a healthiness to price action here, right? You see how these wicks, here are coming back and they're filling the spaces. Same for here. This wick here, big impulse move up, but this move rebalances here. Yeah. Now we didn't get that here, right? We had an inefficiency here. Now remember, we're down on the daily now. The one over to the right is our weekly. But when we look through here, can we notice how the market rebalances that? Yeah, comes up, draws on the liquidity here and here, right? Comes back in, uses that to fuel a move higher, dips down into it again, fuel the move higher again. Then when it breaks down, it rebalances that inefficiency, retests it like a support and resistance flip, and then price sells off. All right. Now, I'm not going to keep tons of these on the chart. Very, really good question coming in here in terms from Joe again. When is the fair value gap not in play anymore? So for me, like a support and resistance level or like an order block, what I want to see is price coming up, reclaiming this. Yeah. So what you'll notice is you get wicks above it, but you don't get a close. A close would be the first clue. Yeah. So you get your close up here. Then I'd want to see it turned into support. So get the close, price comes down, reacts here, starts to build a bullish market structure on the lower time frames, which we'll take a look at, and then pushes up higher, searching for liquidity. So I give this brilliant yet rubbish analogy about liquidity, right? You're thinking of it like a journey, yeah? And you're thinking of liquidity like your fuel, right? So price needs fuel. So price tops up on fuel down here, runs up to here. This is your next fueling station, but your ultimate target is here. As we get to the fueling station here, right, there's not enough fuel available. All you can do is go back here where you know there's fuel, try and top up on more fuel, yeah, to get you further in your leg for the journey. Then when you get to that point, you can always dip back to this level in hope there's more fuel, yeah? And if there is, then you're going to fuel up and you're going to go back again. So what you can see is if you don't have enough strength on that leg here and you get the rejection, the most likely event is that price is going to be looking for liquidity lower down, right? So how do we look for liquidity? The first thing that we've done, we've mapped out on here are our key levels, right? Our support and resistance, high time frame levels. Then all we're saying to ourselves is what else is liquidity, right? So we look for equal highs, equal lows, or relative equal highs and equal lows, which I'll show you again shortly. Because again, price has gone there on a couple of occasions, not been able to surpass it. So we assume naturally that there's liquidity there, right? And then we've got our inefficiencies, our fair value gaps, right? So henceforth, when we come down here, and when we were taking longs here and here, it's not just off the basis of our divergences. That's confluence into our thought process, right? It's much more about this inefficiency, right? This is what I'm seeing as the draw on price. But price can't get past the 50 level, right? 50% of this range. You've got this huge magnet here. That's just begging for price to come up into it, right? It's saying, come on, come and get all the fuel you need, right? All the fuel you need. And it might reject here, it might continue here, but we've got a target, right? That's what we're looking for. Now, when price came up into here and we rejected, sign of weakness, price comes back down. What do? Come back down to the lows, find more fuel, come back up again, try and get past again, still don't quite reach it, rejected here again. What are we doing? Coming back, finding more fuel. You'll notice each time here dropping deeper, yeah, to take the liquidity because we've got stops under here. When we punched this low, there's the stops, right? Then when we punch this low, there's the stops. So we took those, yeah? We've come down here, that's taken that low, and this low, right? This low has taken liquidity from that low. I mean, I could go on and on, but I'll end up sounding like a bloody Sesame Street sketch, all right? But liquidity is king in this game, right? And price is on a constant hunt for liquidity. And that's the best way, or certainly for me, the best way that I look to it. Joe McDonald, great explanation as usual. Thanks, mate. It's I do like to keep things simple, all right? So, bear with me 1 second. I'm just going to pour My tea, remain quintessentially British for you all, not like I can even speak today, right? And then we're going to look at how we trigger these things, right? Because I want everybody to be on the same page. This isn't financial advice. I'm not saying to copy me or to trade like this, but if you've got an interest in the markets, as I have, that I've been studying for years and years and studied some of the very best people within this market, some of the best traders around, then these are just my thoughts on it, basically. Okay. So then while we're here, we run these lows. Yeah. So technically, we would then be looking, right, for price to find liquidity above the highs. Now, we're in a no man's land here, right? This isn't the place to take trades, in my opinion, right? Yes, Brimstone. Fuel station. I think that's a fuel station, isn't it? Yeah, it is a petrol pump. I didn't know if it was that or if it was a medical box and you were suggesting that I needed some kind of medical attention. Probably mental. But we haven't reached these highs here. So look at how beautiful this has treated us. Lows, yeah, bearing in mind these are all levels we've had for a long time. Swept the lows, come out, taken the 50 line, taken the highs. Rejected at the highs, down to the 50 line, retest the 50 line, break down to the lows. Lows to highs, highs to lows. Lows to highs, highs to lows. So I'm not saying this type of trading suits everyone, but a lot of people have been saying there aren't any trade setups out there. Now, very different thing to execute them and trigger them than it is for them to be there. But price has been ranging very effectively between these levels for quite some time. So, okay, waffling on about levels, fine, all well and dandy, but what do we do with them, right? So, again, obviously we had our divergences on. Yeah, that gives us a nice bit of confluence. You would have got in here, here, and here, right? You would have had 3 really lovely trade entries. Now, divergences often catch the corrective move in an ongoing trend, right? So, downtrend, corrective move. Price coming back down, corrective move. But what they also catch at the end of those corrective moves are the reversal points, yeah? So what we need to do is work out where those exhaustion points exist and where our points of interest are, and then we're just looking to trade those. So let's jump down to a 4-hour chart. This is where we're going to start getting a lot of information, right? Now, we know our levels. This is our 50 line. This is our midline of the range, yeah? This is our range low. So we don't want to take trades that are away from the extremities. We want price to tell us, in no uncertain terms, what its plans are. And we can never be certain. This is always a game of probabilities, okay? But just using, and I'll go into a lot more depth in this, but just using our divergences on a 4-hour chart with our key levels, this level here and this level here, how many trades could you have got? 1, 2. That one didn't quite trick, so we're not going to cherry pick. 1, 2, 3, 4, 5, 6. 6 trades, all of them winners, if you could have got your entry, which we'll look at on a lower time frame, all right? So let me do this very quickly because I want to show you this concept and how powerful these things can be, divergences. A lot of people either discount them, or a lot of people who say that I'm just a chart trader, just a price action trader. I do use these things for confluence, right? Yes, most of my theories, most of my trade setups are based on price action, right? Especially on execution, it's all on price action. But if I can get extra confidence from this, then why would I not, right? So I'm just going to flick this on, let's mark them, and I'll show you where we get our entries. Now remember, when this divergence closes, it's not that candle you can trade, it's the following candle, yeah? So, oh, that's not even one there. So just remember that, it's not that candle, it's the following candle, because it needs to close in order to reach confirmation. So not this one, right? Same with this one. And then this one here. All right. Now all we're going to do, remember, we're trading this range and we're dropping down on to a lower time frame. So just a quick comment here from Raps Coils. Awesome name. Love the logo. What is it that I'm using to determine divergences? So this is the B Pro. It's our own in-house indicator. You can find a link to it in the description below. If you've got any questions on it or whatever, just come and grab me at the Nest or on Twitter and I'll ping some info over for you. The key thing for this one over other indicators is this collates information from a number of different oscillators and then works out divergences across them and gives you a much more accurate reading. All right. Now, but you can also spot these things naturally using your RSI, right? So see here, yep, here, yeah, for your bull divs and bits and pieces. So in fact, come and grab me on Twitter. pop me a message and I will share with you a chart that you can start picking these things out manually. It's really, really handy thing to be able to do. All right. So, guys, before I digress too much, as you all know, I love to go off topic. Here we go. Level, level. We've marked our divergences. Yeah. Only our key parameters are only when we run a key level. Yeah. And we get a 4-hour divergence to back it up. Yeah. That's all we've marked here. So these blue arrows are what we're going to trade. We're now going to turn our divergences off. And now we're going to drop down to a 15-minute chart. So I only use 2 methods, right? Well, actually, before I do that, let me draw in our midline of this level. Now, because we're trading a lower time frame now, and we've got this range, yeah, we want to be aware of this range's midline, right? And you can do this if you add, you can do this naturally if you add the 0.25 level on as well, and 0.75 when you draw those fibs out. Right? Because we're in this trading range now, we want to know where the equilibrium is, right? Because that often becomes our first target for price and where we then want to review what price is doing at that level, right? So now we're going to drop down to the 15-minute. Now, this is a really good executable time frame for most people. It leaves you plenty of time to monitor these trades when you're working, when you've got other commitments with family, friends, bits and pieces like that. So I think this is a good and realistic time frame. I personally use much lower time frames than this, right? But you know, it doesn't mean that you can't get the entries here, which is exactly what I'm going to show you. So if we're wrong here, which we are, price isn't ready to go all the way down to the 50 line here to our equilibrium, speak today. But I'm going to show you exactly why we would be looking out for reversals here, okay? So a lot of people saying, well, what's your entry then? It's all well and good saying you've run the level, but what are you looking for? Well, it's really simple. I'm looking for a liquidity break, right? What I would call like a breaker box. So I want to see highs swept. We've got relative equal highs here. Price gets swept, yeah? So we're looking for a move here that's a liquidity breakdown. We want to know where price has swept the high and then closed below the low. Now, the problem we've got using this level here, right, is that we haven't got a clean low until sort of around here. We don't want to be waiting within that realm for price to take that move, yeah? So what we'd be doing is we'd be drilling into a lower time frame here to find this move on the chart because we know liquidity has been swept. But what's key for us is finding this pattern. We want to see sweep of a high, liquidity taken above. We find the low that sweeps that high, and then we want to see price close below it, right? And that's our entry trigger. However, we want to find this on a lower time frame. So let me show you why I trade the 5-minute and down. So we're looking here. We've got our divergence, yeah? Price is coming down, but price on these highs isn't sweeping the prior high, right? I don't know what's going on with me talking today. Hang on. Clearly under-teed. Right, so notice this. Price going down. We want to see the spike up when price takes out liquidity, right? So what do we get here? We're just monitoring the highs, monitoring the highs. We've got this high, yeah? We've also got the highs from over here, but price gets swept here, right? Now, where's the low that sweeps the high? It's here, right? So where's our entry? This becomes our breaker line. So where do we want to enter? Really simply, for me, I've only ever got 2 entry types that I adhere to. Always the same. We wait for the sweep of the high, wait for price to close below the low, yeah? So people can market enter. I don't like to market enter a lot. Slippage, I trade a lot of low time frames, can really hurt the fees. So once we close here, let me zoom in a bit actually, guys. Do tell me if I'm not zooming in enough, by the way. I know I'm rubbish at that. So here's our high. We've also got these highs here and this high here, yeah? We've taken liquidity from all of those. We've now come back down below. This move here closes below the origin of the move that takes liquidity. That's the low that sweeps the high. As we come down, we want to see a big impulsive move through this level to show us that sellers have stepped in. There's an aggression in the move, right? You don't want to see it patter into the level. You want to see it punch through it, right? When it does so, more often than not, it leaves, as we were discussing earlier, a fair value gap. Right? So what do we do with the fair value gap? Well, we want to do this, or we don't want to do this. This is what I do. Right? So I'm splitting this. Now, you can enter on the breaker line. So you set a limit order here when this candle closes. You wait for price to come back, tag your limit order, which it does there, yeah? And then you can put your stop loss above this high, yeah? Now, if we're using the fair value gap to enter, which we are here, so this is candle 1, candle 2, where we have the inefficiency, and candle 3. Now, I adhere to the rules of ICT in this regards because, in my opinion, he's the foremost exponent of the fair value gap in this space. Then, and not just this space, in traditional markets as well, especially FX. Then, what I'm looking to do is I'm looking to have two positions: 50% of my entry on the low of the fair value gap, and then 50% on the 50 line, the equilibrium. We can see we tagged that here, and we also tagged this here. Now, the good thing about the fair value gap entry, and again, according to ICT, which is what I adhere to in terms of these and the stops, is my average entry is going to be here, right? Because it's halfway between this low and the 50 line, where I've got 50% of my orders split across. Now, if we're using the breaker line to enter, realistically, because that's my technique, not mine, it's what I've learned from other traders over years and years and years, and what I implement. I've changed little bits about it, but fundamentally still the same, is it dictates you need to put your stop above this high in case you get another liquidity move into this area and breaks down. So if we do that, which is fair enough, and then we've got our targets, which is our sell side liquidity under here, right? Then we've got a really nice 5.69R trade, call it 5.7, right? However, if we're using the fair value gap principle, what we can do is move our stop loss above candle 1's high. Yeah, which is this candle. Remember, 1, 2, 3 candle pattern. What we're saying is if the fair value gap is valid, price really shouldn't punch above this. And if it does, not by more than a little bit of a wick. Otherwise, chances are we're incorrect. All right. So then we've come up here. We've taken this out. We've now got a 9R trade if it gets to target, right? What do? You're going to get absolutely sick of me banging on about these fibs. I know that, right? Target 1 is our 50 line. What I do at target 1, right, which is a 4R, I'm closing a percentage of the trade at that point, and then I'm moving my stops to entry. Now, a lot of people and a lot of incredibly good traders will warn you against doing that, and I completely agree with them. For me, for my systems, if I get my entry correct, then I'm at the beginning of this impulse move, meaning that price very rarely returns there. If it does, and my high time frame bias is intact, I will just re-enter. What do I mean by that? So I mean that if I get to my 50 mark here, I've now moved my stops to entry, price comes up, takes out my stop loss here, yeah? And then if it takes another run on liquidity higher, but we get our pattern again as a breakdown, yeah? Then I'm going to enter the same trade again as long as my high time frame bias is intact. And I'm going to target that 50 line again. And this time, if we lose the 50 line and go lower, then that's when you're going to just hold the rest of your position down to the lows. So you're always leaving, I don't know if this is just a British saying. If it is, then I'll explain it further. But you've always got skin in the game, is what you say, right? That means you've always got a piece of the action intact, all right? So as price goes up, we see it takes out our stop loss above here, right? So then what do we need to do? We're saying to ourselves, okay, well, if our bearish bias is still intact, yeah, then we wait for our liquidity breakdown here, and then it allows us the opportunity to trade back into it, right? Price still moving up. What would we do here? Right? We've taken our profit, we've secured it. We would then look to move back to our high time frame chart. Yeah, in this case, if we're acting as the 4 hour as our high time frame chart. Nothing here, and let me just delete this fib for a second just so that we can see it clearly, right? Nothing here should encourage you with these candles to be going short. Bullish engulfing, bullish pin bar, big bullish candle punching up above liquidity again. So what would we want to see? Well, we want to see the bearish candles, right? So now we're getting to a point where you're saying, okay, then you can look to get back into a trade, right? You can look to execute here. And what do you target again? You go down to your midline. Midline, if you lose that, you're going down to range low. All right. Which we can see we tag down here. All right. So do you see how we're building the story on the higher time frame and then we're executing on the lower time frame, right? That's all we're doing. And we've done it just with a handful of daily levels, weekly levels, right? And then we're going on here. Yeah, we're using our divergences to pick and give ourselves confidence that these reversals are happening. But as long as we enter the trades in the right way and with the right techniques, we want to see a good risk to reward. It means that when we're wrong, we're always wrong with 1R. Yeah. Now, if your 1R is $10 or if it's $10,000, right? It doesn't matter. It has to be within your risk profile. For me, I'm never exceeding 2% of my account balance as my risk. Yeah. Which is meaning that if I've got a $1,000 account, then my risk has to be $20. Yeah. If I've got a $10,000 account, it's $200. If you stick by those rules and principles, you really will notice the benefits. In fact, it's risk management a lot of the time that separates the very best traders, right? So let me just get rid of these. And let's ping back out and let's look at where we are now. Yeah. So this is why I was saying earlier, we kind of find ourselves a little bit in no man's land at the moment. And sorry, I've missed a couple of questions here. Derry, please, what's the name of the indicator? So it's B Pro or the Burbicator Pro, my friend. Should be some information about it in the description on YouTube. If not, come and give me a shout on Twitter. I've also got some cool free infographics I can share with you guys as well in terms of manually spotting the divergences. And then, okay, good question here from Jay Showman again, or Schumann, which is, do you consider entry on the midline or always wait for outside? For me, I just trade the extremities, right? Now, that can be if the 15-minute is setting our bias, yeah? So let's clean this up. So if the 15-minute chart's setting our bias, yeah, or the 4 hours, sorry, and then we're using the 15-minute, then what we would do is we would look to take the current range, yeah, from here to here. Now we're saying to ourselves, we don't want to trade that midline. We're looking at this, again, to coin ICT's principles as premium and discount, yeah? So you're splitting into, you're saying if you're going long in this area, you're going long at a premium, right? But if you're going long down here, you're longing at a discount. So you want to be long from down here, right? You want to wait for price to come into this area and then go long. Otherwise, what you've got here, if you start taking too many trades on the mid, is okay, price gets down. By the time we get into our bullish structure here, we break market structure. You've got this tiny move, and then all of a sudden you get a reversal. Why do you get the reversal? Possibly because of this order block. Yeah, you drill into a lower time frame, but there'll be an order block in here, followed by this fair value gap. Yeah, which would validate the order block even more so. Then that is going to drive price down, and you're not going to necessarily come up and sweep these highs. However, if price gets up to here, yeah, or down to here, based on our range play, obviously we'd be interested here in the fact that it's a weekly level, but let's imagine that's not there for now. This is a simple range. We've got our 50 line through the middle. This is where we want to be getting interested, and this is where we want to be getting interested. And you can use examples like I've given you with divergences, right, to give you that extra bit of confluence, or you're just waiting for price to hit that pattern and that structure that we just talked about, right? Wait for the sweep of the high, wait for it to come back in, retest the low that swept the high, and then you've got an entry here on the breaker line, or you, most often or not, find a fair value gap in this impulse move down, all right? That's where you're going to be looking, and that's when you're going to be hunting for your liquidity, all right? And that's where we're looking at the moment. So I'm interested up here and on the 0.5 line of the main range, and then I'm interested down here at our key level and here as well. Now, if price starts to consolidate here, yeah, holds this low, consolidates a little bit here and starts to move higher, then I would consider that first of all, we're coming in for these highs and then ultimately these, right? So we can say, okay, the likelihood is that price is moving higher. Now, even though it's only on a 4 hour, we also want to be conscious of this fair value gap here. All right, let me draw that in for you properly so we can see it. Real little skinny one. But what we can see is how price does get drawn towards these, yeah? So we might be in an instance, and I'd be very cautious of market structure here, right? So if we take out this low and revisited this, right, what we want to be aware of is if we've got our lower higher here. So we've got our higher, higher, low, lower high. If we then set this lower low, market structure's against us, right? So we'd be looking at this here as an area to potentially short, all right? Never forget about your market structure. Build in your bias on your high time frame, yeah? And then you want to look across and you want to then transfer that into your lower time frame in terms of execution, all right? So guys, I hope that has been at least in the tiniest bit insightful. I think when we're looking also at daily ranges is something I'd like to touch upon. And guys, use this opportunity. If you've got any chart requests, we'll find a few. If there's a lot that flood in, then we'll just look at the ones that come in the most, or we'll pick a couple of random. But if you've got any charts you'd like me to take a look at as we look to conclude the call, please do let me know. But one other thing that I get asked about a lot in terms of trading low time frames, which is something that I do a lot, is okay, if we're going to be scalping, and by the way, before I go into this, when you're scalping low time frames, you're taking micro moves, be incredibly aware of your position size. You are going to get charged fees on your position size, right? So sometimes you might have to have a 30, 40, $50,000 position size available just to make $50 in profit. You're going to get a percentage of that position size charged to you by your exchange. So understand what their fees are, understand what the funding rate is, what the fee is that you're getting for opening and closing the position, and then also what fees are going on top of that, which is your margin interest, all right? If you type in on there margin interest, Binance, FTX, whoever you're using, you'll find a list across their different assets, and different assets have different margin interest. BNB, for example, has an incredibly high margin interest. So borrowing that for a day is something like 20 times more expensive than BTC in terms of margin. So just be aware of that when you're trading these. Otherwise, you'll scalp some really nice calls. Yeah, it's a really nice chart. You've looked at it, you've found your entry, you've nailed it, you're really proud of yourself, and your balance will hardly have changed. And that's because it's all being gobbled up in fees. All right. So again, before I digress, and in fact, let's do this on the Matic chart. Yeah? We've got a couple of shouts in here for Matic. Let's find our old friend Matic, clear him up. Let's add in a new one from Binance, actually. Here we go. Nice, clean chart. This is what we like to see. So, should we just do a top down, brother? Yeah? Give that a go. And then Justin, good God, you've got the most amazing surname. I'm not going to be able to pronounce it though, am I? Venejas Rojic. Is that right? Good God, I hope that, just love that name. Looks awesome. Right, so let's smash a top down. Oh, here we go. God, there you go. When was the last time? Bull run. Look at those beauties. Some nice Fibonacci entries there. We did make a nice amount of money actually on Matic. But let's just get rid of this. We don't need this now. Old news. So here we are, Matic. Where are we currently? Where are we looking to go? So I'm focused here on the immediate term. I want this to really tell me where we are with price, right? So we're going to do the same top down. This has to tell you everything you need to know about how I just pronounced this poor guy's name, right? But thank you for your understanding, Justin. So here we are. Remember what we said, yeah? So we want to know what's capping the market to the upside and the downside. So let's take a look. Now, for those eagle-eyed of you that are looking at this, saying like, hang on a minute, he took this one last time on Bitcoin. For me, it doesn't have exactly the same amount of confluence with these two closes above it. The other one was right on the line. And when we drill down into the lower time frames, it made a lot more sense. All right. So for me, this is what's capped the market. We failed to get above that, failed again, and it's caused this big sell-off, right? Where's the sell-off gone to? Sell side liquidity. Where's the sell side liquidity sat? Here. Or that's where it was sat, right? So then when we get these moves beyond that, that's what we're looking at. However, if we were only ever focused on the extremities, like here, for example, here, then this wouldn't have caught that move, right? This one would have caught that, but you will miss certain bits and pieces. So always better to be aware of it. On the weekly, we want stand that really stands out, smashes into you like a sledgehammer. Yeah, you say, okay, actually, this is really, really clear, because they're our key levels. The higher the time frame, the more weight that we give to the analysis, right? So now we're looking for this, which we're saying to ourselves, okay, what has capped the market here? Could it be the lows of these candles? Could be. The price has now punched above this. This has held up for 2 weeks here. Right now, the reason for this is because resistance was obviously around here. Price has punched above it, retested this level as support, punched through it, yeah, retested it as resistance, and then sold off to find liquidity lower, right? So for me, that makes a lot of sense. So now when we drop onto the daily chart, right, we can see these interactions with this midline here. And actually, I think if we look to refine this, yeah, you could probably do something like that, right? Or even onto these here. Resistance, 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 punches through, retests, deviation, over, under, sells up. You just got a lot of interaction, right? Just look for the amount of key points of support and resistance that you've got. Remembering that we're always treating these as areas as well, guys. It's not going to be down to that specific dollar. Right, so what can we see here? Deviation, big sell-off, all right? Then we come down here, sell-off below, comes back up, finds liquidity here, deviation again, big sell-off lower. Deviation, retest, sells up higher, takes this really cheeky little dip back into here. Why does it do that? If you're like me that believe the markets are manufactured or they're engineered rather than that, then for me, this is just a magnificently brutal move to watch. All these stops taken out. Smart money, smart people, smart money, smart retail that are long here are going up, thinking they're in heaven, targeting these highs. All of a sudden, the algorithm kicks in. No thanks. Bang. Takes you out. Why? Because there's stops below here. Then you get these fast, almost impossible moves to be part of that move to the upside. Another reason you want to take profit when you can as well. QBS, damn, what a beautiful and sweet radio voice. Thank you, my brother. This guy here is not only a talented trader, he's one of the best graphic designers in the world. An absolute legend. Love him like a brother. Good to see you guys. Imran Khan as well. Guys, feeling the love today. Really feeling the love. Hope you guys are enjoying the stream. So, where are we here? Swept liquidity, came back up, took people out, came back up again. What could we have done to avoid that? What do we say about ranges? We want to know the halfway point. Our equilibrium. Let's make sure this is nice and accurate. Yeah. So if you were long down here, you could take some profits here. When you see price starting to break down here, you can always get out of the trade, get back into it when you're back above it. Yeah. Don't be afraid of being nimble and maneuvering around, getting in and getting out of trades. All right. So that's where we are on a daily, right? What else can we do? We want to use our B Pro. Always want to use our B Pro. Look at that. Gorgeous, gorgeous, gorgeous. We just ignore the ones that aren't near our extremities, right? Trade, great trade, great trade, great trade, great trade. This would be lovely as well. Would have been difficult to get on board with this one because it would have closed here. We're going straight into the 50 line resistance. We then get this big punch above it, right? But what are we now interested in? So for me, if we're going to see a pullback here and you want to be long on Matic, I'd be watching this fair value gap here, right? Because if price were to come back into that and hold, then I think we look to take out this key weekly level and ultimately these stops that rest above here, okay? So we've got that. Now let's drop down onto our 4 hour. You can see price starting to kind of falter above here a little bit. Why might it be doing that, guys? I'm going to show you two really key reasons that you can see straight on here, right? Naked highs, untapped liquidity. Right? What have we done? We've run into those, right? Can you see those thin lines all right? Let me know if you can't. I'll make them thicker, right? But then what else I'm really keen on is this order block, right? Now, different theories on order blocks and stuff like that. And again, I have to refer to him because he's the real authority in this area as far as I'm concerned, which is ICT. But for me, if you've got a move here, ideally what you want is a move that first of all shifts market structure. right? Which this doesn't, right? But the next key element for me that makes a good and valid order block is this. The last up candle before an impulsive move down, right? Now, you might say that's not that impulsive, but that's a big impulse move that takes out these lows, right? So why am I interested in this, or what gives me extra interest in this order block, right, is this. The fair value gap that happens after it right here and sits within its range, right? Which kind of leads us to where we are now, right? So again, the other thing that really validates it for me is we see as we interacted it in here, look how powerful that sell-off is. That is seriously aggressive, right? That's dipped into there, taken out the stops above those highs there, and then sold off, found liquidity here before rebuilding. Then what it's done, it's got comfortable down here, it's taken out the stops, run the lows, we formed bullish market structure, price sells up on a hunt for liquidity again, goes past our 50 line, into the order block, and then sells off. We're now back here, right? I would need to see closes above here, yeah, and a 4-hour close really to think that price could be coming up, and then it's running straight into this weekly level, all right? So for me at the moment, these provide potentially good shorting opportunities, right? So once again, if we start seeing our breakdown here, again, BPro caught the div here, caught this little one here, tiny correction. Price has now run up. Why? To take out the liquidity above these highs. So if I was anything here, I have to say that I'd be leaning more bearish than bullish. But again, I would be requiring structure breakdown, all right? And if we get that structure breakdown, right, and we take out that low, yeah, that's the key low, high. We come down, we trade below this low, we come back to retest this, then I'm targeting that, all right? That's just how I see it, all right? That would be my thought process for this. So I hope that's been helpful on Matic. I know we had another couple on there. Hang on, I don't want to get too lost. Got a few questions as well. Razvan, awesome job. Do you mind doing Rune 2, mate? Yeah, no, let me take a look at that in a second. Bashi, you talked about 3 candle stop loss. Can you explain that? Yeah, certainly, mate. So, if we are... So let me get you anything. It has to be a fair value gap, right? So we need a key fair value gap that we're trading down. So for example, if we were trading this one here, so the 3 candles that we're interested in are 1, 2, 3. All right. So first candle, because it precedes this impulse move, which contains the fair value gap, which is the gap between that candle's ultimate low and that candle's ultimate high. We can see what happened. Fair value gap, takes it out. Hang on. Comes back into it. We've got our first part of our order on this line here, our second part at 50, or you can have it all on this line if you want. Now, the one thing that doesn't make this the best example is there's not really much difference between this high or this swing high. But let's imagine for a moment that this swing high was like up here. Yeah? That is a terrible line, isn't it? But let's imagine the swing high is up there and we think we don't really want to be putting our stops above there because it's too far away. Well, we can use candle 1 or candle 2. Now, the instance where we would use candle 2 of this 3 candle move is if candle 2's wick is higher than candle 1. More often than not, candle 1's wick is higher, in which case this would make our stop loss. Yeah. And our entry would be here. And our first target would be here. All right. So you get this absolutely anywhere you get a fair value gap. Let me just show you another one very quickly. So fair value gap in here, right? Boom, boom. What happens? Price comes in, tests it, sells off. Obviously, we wouldn't take this trade because we're too near to a weekly level. But if it was the case, what it would allow us to do is put our stop above here, candle 1, 2, 3. Our stop loss goes above here rather than having to go above the swing higher. All right. The basis of that is purely because as we trade back up, if our theory's right, yeah, we shouldn't be breaching this. Yeah. And you can actually see as you roll this forward, right? We didn't actually close above that until here. And then look what happened. We get this bullish impulse move up. All right. So that's the key thing that we want to remember. It's only valid when we're talking about fair value gaps, right? It just helps us with our stop loss placement. So I hope that has been of interest, mate. I'm going to pop on to Rune to just finish up today. Where's my Rune gone? Let's bang this one on Binance as well. Get rid of all this old stuff. Perfect. So we're going to do this one. We're going to do last top down, all right? Just maybe should make sure I haven't missed anything. Ravindu, thank you very much for the comment, mate. BTC, please. Yeah, so basically, mate, if you watch the recording of this, which will be available shortly, we do a really keen top-down analysis on Bitcoin from the weekly right the way down. So take a watch of that, and if you've got any questions, my friend, come and grab me on Twitter, and I will answer them, or even better, across on the Nest where I'm in the chat every day. Let's have a look. What have we got here? What else? BTC, please. Imran Khan, can you please tell the Bird Nest support to respond to emails sent to them? No problem, mate. Ping me one over on the Nest. Yeah, if you're having issues with the emails, it might be getting caught in a filter or something. Pop me a message on the Nest, and I'll make sure that the team have got that there. Sorry, and good to see you, buddy. You missed the first part. No worries. We'll do a top down quickly on Rune before we finish the day out, and then this will be available on recording as well. How long do I think the bear market will last? Not sure. I try not to hold any kind of time biases like that, but I would very much be linking this to macroeconomic events such as inflation. Countries need to sort a lot of stuff out. Interest rates are going to take a lot of people out. We've got the geopolitical situation with Ukraine. So there's a lot of factors to really take in. Nicole, lovely to see you on the stream again. Thank you very much for your comments. Bashi, seems you copy a lot of stuff from CC. Sorry, mate, I don't know who CC is. By all means, let me know. Most of my teachings are from SZ or ICT. I also learn a lot of stuff from EXO and the wonderful team that I've got around me at the Nest as well. I think as traders, we're kidding ourselves if we're saying we're not always learning. Very few methodologies are unique. It's all about our interpretation of them as they push them across. As I always say, I always credit the people that I learn from purely because they're the ones that deserve the respect and the kudos for it. You know, I didn't come up with these. I've adapted some of them, like with the breaker box strategy, using that in combination with a fair value gap, but I didn't create either of them. As far as I know, ICT was the creator of fair value gaps, and the first one to really be an exponent of those inefficiencies, as well as order blocks as well. And SZ, for me, is, you know, he's the king when it comes to price action, right? So they're the people that I studied under or took the time to study and learn a lot from. But yeah, I'm sorry, mate, I don't know who CC is, but yeah, please explain. If it's someone that I've learned from, always happy to accredit them. Razoon, yo, my man, there he is. Razoon, I don't know if any of you guys caught this Legends live stream that you did with me talking about Fibonacci, time. I've not really gone into time too much on these webinars, but I do, for example, look to trade the London, New York crossover, right? That's the real key time for me over here that I'm seeing the volume increase in the market where I like to trade, and also for the setups for the London Open as well. But I'll do another stream on that. But guys, if you're not following him already, get yourself over. That's Razoon. You can see the name here. I'm going to pop it up on the stream. You can see that there. Just follow him on Twitter. Go and look at his stuff. He's got these unbelievable videos, right? I'm so jealous his ability to do stuff like this and his trading. Such a dude, and those videos absolutely rock. So go and check him out, guys. There's RAZZOORN, and you'll be blown away, especially for things like the Fibonacci use as well, which I used in the most basic form. This guy understands them on a scientific level, all right? So, Rune, quick top down, right? We all in, yeah? Here we go. So, boom. Levels. What are we looking for? What's capping the upside? What's capping the downside? So, here we go. Right? Not really sure what I've added there, actually. Grab that line again. I tell you what, it's so long ago I was on Rune, actually. I was obviously doing this on a black chart. So, keep with our weekly theme. This, for me, is where the key liquidity was residing under this low, all right, as we've come down. And And then we've come back up. What's capping the upside here is a little bit trickier, actually. We've kind of come up from here. I quite like these levels here. We've not gone beyond that. And then in terms of, is there anything obvious with the midline? I wouldn't say obvious, no. So I'm not going to put anything in from here unless it really stands out for me, right? Maybe this here, but there's not much confluence to the left of it. That would be because that's capped the market to the downside here. Let me just show you my thought process. Right, cap the market, come back up. When we've broken through it, we've retested it, and then it's sold off. So there's some validity there. We struggle to carry that validity across to here, yeah, with any kind of cleanliness. So what we're going to do is we leave that in, and let's move down onto the lower time frames. Obviously, still a high time frame, which is the daily. Okay, so it's got significance. We can see that stop the market, comes back up, retests it, then we get the sell-off. We can then use this here to focus on this current range that we're in. There we go. So we use that to focus on the current range that we're in. All right, we've got our midline here. We've got the high, we've got the low. We can see how when price lost this level, retested it, it works its way down to the 50 line. We got this small deviation. Price ran back up, smashed into these lows. Yeah, here. See those? But what else did we hit? This fair value gap, right? So we can see that price loses that, comes back in to fill this inefficiency, and then has the momentum to then just travel lower. Now we've taken out this low down here. This is what we're now interested in, right? So we are now within this range, this being the range high, this being the range low, right? So we're going to drop this down onto our 4 hour. Let's just mark this up. So we've got our levels nice and clean. 4 hour chart. Here we are. So bearing in mind we lost the level down here, what could this have taught us? Or not taught us, but what triggers could it have given us? Right. Remember, only trades at the extremities, yeah? Come down here, lose this level, get our divergence. This candle here is tradable. Where do we trade it down to? The 50 line. Fine, we get the rejection, yeah? What we liked about this one here is it took out the prior candle's highs, generating liquidity to take us down to the 50 line. That's still more than enough of a good move, yeah? 50 line. Price then comes back up. You've booked a few R on that trade, takes out your stops, which are at entry, no problem. Has your bias changed on a high time frame basis? We know that it hasn't, right? So we're short again here. What happens again? We come back down. What do? We reverse where? Not at the 50 line, but what do we have here that we didn't have back here? Is we had these naked lows, right? So we've run into them. We'd be aware of them. Maybe we just move our stops to entry. Yeah, either way, price comes up, we get taken out. Not a problem, because then what do? We get a third attempt. So we booked a couple of R. Maybe we're out at break even here, or maybe we're at a small loss. Fine, we lose 1 R here. We've made a couple of R here. We then get this move into the 50 line, right? Again, so 1, 2, 3 good trade opportunities, just knowing a level and then understanding the move. Divergence here is invalidated because we move higher. But this is the one we're looking to catch. Price runs above this level, takes out these highs, yeah? And remember what we said, we would look for this on a lower time frame, but we're always looking for the same kind of pattern. We're looking for a run on the highs. The low that sweeps the highs becomes our breaker line, right? And then we see from down here, price comes up, comes down, closes below, tags us here, ultimate target is down here, right? Now we ran these lows, we can defer, we can see we get our divergence, comes back up, we can trade that to the 50 line, and we got the same opportunity here as well, all right? If we wanted to really drop this into microstructure, and again, I'm conscious of going down into too lower time frame here, guys, because I know a lot of people, first of all, don't trade them, and secondly, you can get yourself really, really chopped up in there if you're not using the right kind of confluence, yeah? But look what we're saying to ourselves here. As we said to ourselves on this short trade, which is why I'd still be targeting these lows on Rune right now, because we're still hunting for liquidity, right? We had this key low here that we came into. but we didn't really see the reaction we were looking to see here. We didn't really get those impulsive moves higher, creating the fair value gaps, and we didn't really take out the lows before. We did here, but then we failed to run these lows here and here. So that's what we'd be looking for here. Where in contrast, when we've come up to this point, what are we looking for? Key highs to be taken out. Where's our key highs? Here. Those highs get taken, right? Where's the origin of the move that takes those highs? Let me zoom in a bit for you so you can see the structure properly. High, low, high, low, high. So it's this low, right? So this then becomes our breaker line. We close under it here. We can use this as our trigger. Yeah, stops above the swing higher. Just make that. However, remember what we were saying before. We've got the break, right? We have the impulse move. Price punches through it. We want to see that aggression when it's ready to move. And we've got two fair value gaps here. One. All right. And then, well, that's it actually. That one, sorry. Because we've come up, we've broken structure. We're into it here. We wouldn't be worried about that one as we're coming down. We're then just targeting lower prices. And if you've entered here, remember the 3-candle rule? 1, 2, 3. Stops above here. Our short entry, which even if we're taking on this outside line, yeah, remember, we can feather them in, right? So we can average into these trades by coming into the middle line as well. But if we're not doing that and we're just taking this, there's our stop, 1, 2, 3 candle pattern. We just want to make sure that our initial target, these are almost equal lows, so relatively equal lows, but there's clearly something that reversed the market here, right? We just want to make sure that when we come down to our first take profit, which we can see here, that we've got enough of a risk to reward, that we can skim some off the trade, but then we can still afford to go lower. So we've skimmed the trade here. We've moved our stops to entry. Do we re-tag those stops? We absolutely don't. So what are we doing now? We're playing that to our ultimate target, which is down here. Yeah. And you would obviously look to be trimming profits on the way down, right? Because even with something like this, right, you're coming down, you've got no reason to get out of the trade until you take out these highs, right? Because that's your break-in structure. And you can drive into the lower time frames and find more key breaks on those time frames as well. We've got relatively equal highs. Run into those, yeah? You can hold your position. You could have taken profit all the way down here. I mean, this is a 9.25R trade. You're in plenty of profit. But then don't be afraid to close the trade out or remove it or compound, right? Because then our bias is still intact, right? There's no reason for us to not believe we're searching for the sell side liquidity under these lows. So what do? Well, we're looking for our structure, yeah? Remember, same pattern. Here's our highs, yeah? So we take the highs. Have we run the highs? Yeah, we ran the highs. Unfortunately, this is the low that ran those highs, yeah? So it doesn't give us an opportunity on this level. But if you drill into the lower time frames, you will find an opportunity and you'll find a move in here, right? Whereby price comes up, sweeps the highs, closes below the low that takes those highs. And then you either get an entry here. And in fact, I can just drop this down and show you in real time. So if we're looking for highs to be swept, on a 5-minute, this is the low that takes the higher. Right, we close below it here, so we can enter on this candle, or we can enter on the fair value gap, right? Here. Oh, I need to do that. Right, between this candle's low, this candle's high, this is the inefficiency, stop loss above here, and then we're just compounding. We've got an immediate target of these naked lows where we expect there to be liquidity, and then our ultimate target is down here. When can we get out of the trade? If we see a market structure shift once we take out a key low, yeah, that's where we want to be monitoring it, right? But if we just go back to a higher time frame again, what you'll notice here is this up candle, right? So this should act as resistance, right? So now we can say to ourselves, okay, if we come back to this, it might provide another sell opportunity down into here, or it at least helps us manage our trade out, okay? So right now on Rune, I'd be looking towards these lows. I think a really clean setup would be a run down into here, sweep of these lows, taking out this, all right? I mean, a deeper move into these is possible. But again, we just want to look at this with market structure. What we then want to see is price come back in, retest that low, right? So retest the high, that sweeps the low. Then when we get above it, that then becomes our breaker line. And we almost always have a fair value gap in here as well, right? That will allow you to enter. So look, guys, I know we've run long on this one. Had some really, really good questions today. Had some great interaction from you guys, which I always deeply appreciate. And I do appreciate all of your feedback as well. Everybody that joined the stream today live, you're all legends in my eyes. I hope this has been useful for you. Do smash up the likes. It really helps the algorithm pick us up and helps get this information out to other people. Please do provide feedback. If you like some of the stuff you saw today and want to see more of it, let me know. If you don't like it, let me know. Just be constructive with it. Don't just say you're an effing idiot. I appreciate that. I get told that plenty of times from many other people. But just if we're constructive with our feedback, then what we can do is make sure that we tailor these sessions so they're more effective for you guys. All right. But yeah, I digress. I've got to let you guys all get on. We want to be getting ourselves into the chart. We're getting into that nice period now. 1:30, 2:30. Really like hunting around the charts for some opportunities. If we got this big rip down now in Rune, this is what I'm going to be looking for, guys. The reactions here and seeing if we do push higher. All right. Thank you to everyone for the comments. Thank you to everyone for dropping by. I hope this has been interesting. Remember, I'm going to be live again next week on Monday and Wednesday. If you've got any chart requests, bring them all along. Imran Khan. Bless you as well, my friend. Also, Imran, do remember, pop me a message if you're struggling with the memberships over there, or you're struggling to get. I know, obviously, it's been a really big influx of stuff there, so I know there's a little bit of a lag. But pop me a message. We'll have a chat with the admin team, or pop yourself into one of the chats and just tag Nest team or admin team, and they'll get everything sorted for you guys. Everyone, thank you so much. Blessings to all of you. Have a fantastic week. Trade safe. Be aware of what's going on. Also, be aware of the news events. Check the posts and bits and pieces coming out on Twitter or over at the Nest. Pop along and grab yourself a free membership. We've got some really cool things coming up in the next few weeks that I'll keep you all up to date with. And I look forward to seeing you all on Monday.